Hello everybody, today I want to explain taxes when buying and selling stocks. Now, did you know that taxes can significantly impact your returns in an investment account? In this video, I will explain how taxes work when you buy and sell stocks. I will cover the types of investment accounts where taxes can dramatically impact your returns, as well as which types of accounts you pay no capital gains taxes in when buying and selling stocks. Hello everyone, I'm Tom Poltersdorf, owner of Beyond Your Exit Wealth Management. I help business owners financially prepare themselves for an exit or retirement, and I've just seen so many mistakes over my 15 years doing this with trading and folks unintentionally getting themselves in situations where they end up owing the IRS a huge tax bill. So I want to create this video, hopefully get you educated and prevent that from happening. There are tax ramifications when you buy and sell stocks, and there are essentially two things that can happen. You can buy or sell for a gain, or you can buy and sell for a loss. First is the capital gain, when you sell it for more than you bought it. So let's say you bought a stock for $100 and sold it for $110, the capital gain would be $10. There's also the capital loss, when you sell for less than you bought. So let's say you bought a stock for $100 and sold it for $90, the capital loss would be $10. Now what happens is there is either a short-term capital gain or loss or a long-term capital gain or loss. What makes it short-term is when you hold it for less than 365 days or 1 year. You buy a stock and you sell it within 365 days, it's short-term. Short-term capital gains are taxed at the same rate as your ordinary income rate, ranging anywhere from 10% to 37%. So if you're a high income earner, you are likely paying at the most unfavorable rates. So if you do your own trading, it would benefit you to check when you first bought your stock, ETF, or mutual fund, and look out to when you are looking to sell it to determine if it will be considered short-term or not. A long-term capital gain or loss is when you hold an investment greater than 365 days, so 1 year plus 1 day. If you sell on day 365, it will be considered short-term. When you sell a stock, ETF, or mutual fund, or a business for that matter, and you hold it longer than 365 days, you can qualify for a substantially lower tax rate ranging from 0, 15, or 25%. How your filing status is and your income will determine which one you fall into there. So for investors, this means there's a big incentive to hold appreciated assets for at least a year and 1 day, because most of the time investors want to avoid having to pay at that higher capital gains rate. Now, all this applies to taxable accounts, also known as brokerage accounts, individual accounts, or joint accounts. These capital gains rules do not apply to special tax advantaged accounts like a 401k or IRAs, because in those accounts, capital gains are not taxed. In one of these accounts, if you bought a stock for $100 and sold it for 10 grand or 50 grand or more, within a tax advantaged account, you don't pay any capital gains taxes, which can be a huge benefit to growing long-term wealth. For the majority of tax-advantaged accounts, you pay taxes when you make a distribution and request to take money out of the account. So just be aware it will count as ordinary income, and if you're under the age of 59 and a half, there's an additional penalty on top for 10% of that ordinary income tax. So just be aware of which account you're investing in. With taxable accounts, pay attention to when you are buying and when you are selling, because if you end up having a capital gain, you want it to be considered long-term for the favorable tax rates. In the 401ks and IRAs, you don't have to worry about this as much, because in those accounts, you pay zero taxes on any capital gains. But for the IRAs and 401ks, be careful when taking money out of those accounts, because that's where the IRS can get you with taxes. So if this is helpful and you got value, hit the subscribe button, and I will see you in the next video.